大家早安，欢迎收听通勤10分钟 On the way to work。
每天早上跟着我们一起掌握最新的国际商业新闻，了解各个产业衍生出来的商业趋势。
我们相信每天只要花一些时间一起进步一点点，长期下来就能够看见巨大的成长。我是 Esther，
我是 Tony，
让我们一起在通勤的路上前往世界。
大家早安，欢迎回来通勤10分钟。今天是台湾时间的12月27号星期六，大家应该很惊喜吧？不过看到这个开头呢，应该已经知道这是我们 bonus track 的访谈系列的第2集。没错呢，我们每个月呢都要做一个访谈系列。那这个系列呢，其实也算是我开启了无路之路之后呢，我开始呢想要做了一个有趣的一个 project。今天要访谈的主角或是来宾呢是持续买进。我知道这本书啊，其实在台湾非常非常的热门，甚至持续买进的作者，我们要访谈的是持续买进的作者 Nick。那他其实呢还有跟我讲一个非常特别的一个小趣事啊。那我们在访谈里面也会谈到，他说呢，其实台湾呢是持续买进这本书呢在全球的市场最热销的一个国家。但是呢，他本人呢是从来没有去过台湾，甚至呢他完全没有想过说他在写这本书，甚至这本书出版，然后呢，这个在台湾上市之后呢，他们完全没有想过呢，在台湾呢得到了这么多的共鸣。其实这本书我觉得蛮好看的，我自己是看英文版的，我很快就读完了，那很好理解。那我们在这一集的节目呢，也会提到非常多他在这本书里面呢写到了很多概念啊，让大家去了解持续买进的背后的意义，然后他想要给大家的建议。更多呢，其实是回到这个个人理财啊 ，personal finance 啊，还有 savings 跟 investing 的这个基本的一些尝试，或是说基本的必须要拥有的一些心态啊，甚至包括我们也讨论到很多是情绪面啊，怎么样去面对你的财富啊，或者说怎么样的去打造你的财富，我觉得非常非常的有趣的一个讨论跟有趣的一个对话。那一样，这一次的访谈呢是用英文进行的，所以大家如果呢你可能你觉得英文会太快的话呢，我一样在今天的这个 show note 下面呢，就是节目的资讯栏下面呢，我帮大家弄了一个逐字稿，那大家就可以去点选逐字稿呢，然后呢去看。那我觉得呢，其实真的还蛮好玩的啦，因为这一次的能够呢去找到 Nick 呢做这个访谈呢很有趣，因为其实 Nick 呢是第一集我们 bonus track 第一集访谈的无路之路的作者 Paul 呢，他介绍给我的。他那时候我在跟 Paul 聊的时候，他就说呢，他认识 Nick， 然后他们每次呢都在讨论说，Nick 你的书啊，就是在持续买进这本书在台湾就是很畅销，然后 Nick 每次都就是有点满头问号说，为什么会发生这个事情啊？然后因为呢上个月我们有跟 Paul 做访谈，然后开始跟 Paul 聊天的时候呢，就聊到了，然后就认识了 Nick， 那就跟 Nick 呢做了这一次的这个访谈。那我觉得非常非常的特别啊！自从我开启无路之路之后呢，踏上了就是新的一个道路，然后开启一个新的旅程。裸辞之后呢，其实开启了很多，遇到非常多不同的机会，然后这些机会呢，其实都是好像 somehow 呢就是连接起来了。那除了连接起来之外呢，其实我觉得多了很多时间，也会持续的在 Podcast 上面呢跟大家分享这一段的旅程，甚至是在如果你还没有追踪我们的 IG on 的一个way to work 的话，你欢迎追踪，我也会持续的更新裸辞日记。我们话不多说，我们就直接赶快进入到今天的这个节目主题吧。This is the second episode of our special interview series. I have Nick, the author of Just Keep Buying, on the show today. Welcome, Nick, on the show.
Thanks for having me on, Tony. Appreciate it.
Yeah, so the book Just Keep Buying, in Chinese, 持续买进, has become incredibly popular in Taiwan. And what's especially interesting is that Taiwan wasn't even the target market in the first place for Nick. Yet it ended up performing better than anywhere else in the world. I think that's a very interesting fact. Despite that success, Nick has actually never been to Taiwan, right?
I've never visited the country. I've technically passed through the airport when I was on my way to Singapore one time, but that's about it, unfortunately. So I've had like maybe 2 hours in Taiwan in Taipei, but that was about it.
That's it. And then it gained a lot of traction and people were talking about it. So today I'm very thrilled to have him here to talk not only about Just Keep Buying, the book, the concept, but also maybe some behind the scenes stories of the book. And this will be the first piece of content created specifically that Nick has been involved for readers in Taiwan, like the first podcast, the first interview. Nick, do you want to do like a quick introduction of yourself for those who haven't read Just Keep Buying or might have heard of it, but still not sure what it is?
Yeah, so my name is Nick Maggiulli. I am a data scientist, was a econ major in undergrad, just worked in litigation consulting, did a lot of data work, and then I got really into personal finance and investing and just started started writing about it in 2017, started a blog. Eventually, I actually changed careers. I'm now at a wealth management firm. I'm a COO at a wealth management firm that has over $7 billion in assets. And so, it's just been quite a ride going through all that. I've been put out 2 books and been writing for 9 years now. So it's just been so fun, like hearing from people, getting the reactions from around the world about some of my work and just trying to help investors like navigate the financial markets where we can.
That's an impressive background. And then, Nick, you talk about you started writing in 2017. You've been writing for like almost 9 years while having a full-time job, and then you're exploring, and then you put out 2 books. And I think that's very interesting. And then that's a great kind of even the role model for me, because I work full-time and then I'm working as a podcast as my side hustle. Now I'm doing full-time podcaster, and then it's been great to connect with people that has been on this path or has been doing some side project on themselves. But today we want to talk about Just Keep Buying, and specifically even in Taiwan. You told me that in Taiwan the book has been doing phenomenally. Can you share some data for us, for listeners and readers?
Yeah, so unfortunately, the most recent data I have is through the end of 2024. Publishing is a very slow business, so it takes a long time, even though like we can reach out to people, will misreport things. And so through the end of 2024, it had sold over 110,000 copies, and it had sold 80,000 copies in 2024 alone. So it's obviously taken off. I know I've had friends. I have a friend named Paul Millard. He lives in Taiwan. Him and his wife Angie and their daughter, and he always sends me photos anytime he sees my book at the bookstore, and it's usually like in one of the top like business slots, right? So it's usually doing well, and so that's how I know it's still doing well. So I don't have any 2025 figures, right? So I have no clue. Did it sell another 80,000 copies? Did it only sell 30,000? I don't know. But as far as I know, it's doing well, and I'm very thankful for that and very grateful that it's resonated so well with Taiwanese investors.
Yeah, exactly. And then I think that figure, even though it's like until end of 2024, still a very impressive figure for even any book in Taiwan or even in any market around the globe. And I think Just Keep Buying the book, from my experience and lots of feedback from Taiwanese readers, it is a very easy and straightforward personal finance book. Some even said it's the personal finance version of Atomic Habits. Readers enjoy reading it, and the book is easily comprehend and easily read. So today we're going to talk about, I think, mainly 2 topics. The first one, let's go over what is Just Keep Buying, right? Maybe for readers, listeners that might have heard of this concept but just doesn't really understand it, or who's interested in learning or even picking up the book after this episode.
So I would describe Just Keep Buying as the most concise and consistent framework for building wealth if I know nothing about you, right? With no information on your background, right? If I could only give you, let's say, 3 words on how to build wealth over time, I would say just keep buying, right? If I could give you a full sentence on how to build wealth, once again, knowing nothing about you, just what's the most likely solution, I would give you what I call the mantra of the book, which is the continual purchase of a diverse set of income-producing assets, right? And obviously, if I could give you more than that, I would give you the whole book, right? But you can just see, like, we take this whole book, which covers a lot of these different issues, and I try and answer a lot of different questions inside the book, right? Questions on saving, like how much should I save? Questions on investing, on market timing, on valuations, on all sorts of things, right? And I take that whole book and I try and summarize it into a mantra, which is the continual purchase of a diverse set of income producing assets. And then if I tried to summarize that even in a tighter way possible, it's just keep buying, right? That's the overarching message. It's got the psychological factor built in, right? It's like, instead of thinking about, oh, should I buy this? Should I buy that? Point is to keep accumulating assets. It is the bedrock of capitalism. And while we are still in a capitalist society, that is the thing that tends to work. You have to own income producing assets. And the people that generally buy income producing assets end up getting wealthy. Those that don't own many don't. Of course, there's exceptions. There's people that just have super high incomes and they don't need to own any income producing assets. And there are those people who don't have a lot of income, but they buy income producing assets and end up getting super rich. So you kind of see both sides of it. So that's kind of where the high level of what Just Keep Buying is about. I split the book into two sections: saving, which is like the personal finance side, and then investing, which is a little bit more technical side. And so that's kind of how it's laid out in the book, and we go from there.
Mm-hmm. And I am just curious about maybe the story, or kind of how did you first come across the concept of just keep buying? Because it sounds such a powerful message. And then when you talk about, I think a good example you just talk about is if you know nothing about the person that is sitting next to you or you're talking to, if you want to give them some advice or something about personal finance or building wealth, it's these three words: just keep buying. But how did you come across it?
So I saw this video by Casey Neistat, who's like an American YouTuber back in the day. And he was talking about some advice he had gotten from another YouTuber named Roman Atwood. And Roman Atwood said, just keep uploading, right? And it was like a motivational thing for Casey Neistat. He was living in New York at the time. He was doing this vlog very early in the YouTube days, 2010s. And he's just keep uploading, right? And that's what allowed him to be successful as a filmmaker. Around this time when I'm watching this video, I happen to be like thinking about personal finance. I'm not really blogging yet. I start analyzing some data from the stock market, and I realized that like if you had just kept buying over a very long period of time, like you would have built wealth in most periods. Of course, that's not true of every period, but in most periods you would have built wealth. This is at least true in the US. It's even more true when you diversify across a bunch of different asset classes and you buy over a long period of time, right? You put that all together and you can see that just keep uploading. I said, oh, just keep buying. And I made it into an investment strategy, right? And it's not that it's like a novel idea. Like people have been talking about like buying over time for a long time. I think the branding on it isn't great, which is like why people have said, dollar cost averaging. Like, oh, isn't this just dollar cost averaging? I'm like, yes, it is. But like dollar cost averaging is not a good, in English, it's just too many syllables. It's like dollar cost averaging, right? Just keep buying just sounds better. And so a lot of times having the right name or the right way of branding an idea can be really effective. And it's not that I came up with it. That's not even the idea. But what I did do is I said, hey, let's show with data and evidence that this is actually the most effective method, and here's why. And I think that's the thing that I did differently. People have been saying it for a long time, but then I put so much data in there that it's like overwhelming that this is obviously like the best approach for the typical person. Like don't spend so much time on the timing of your investments and all that stuff. Focus on the things you can control. And that's usually your career, your income, how you spend money. All these other things are far more important than like the many different investment decisions that we can make.
Got it. And I think what you just talk about, and then how this branding or this mantra of just keep buying, it really helps with, I think, the emotion side of kind of investing or building wealth or personal finance, right? And then even in the book, you talk about purchase these assets, maybe purchase the market, not just an individual stock. And I think a lot of time people purchase individual stock will end up just thinking about it over and over again, and that's kind of like the emotion side come into play. And I think the mantra just keep buying just kind of alleviate a little bit of that.
Yeah, and I think the premise of that was that if you focus on kind of the bigger picture of like It's a long-term process. It's not there's very rarely it's one decision that causes all of your success or all of your failure. Of course, you can, like, if you do something really crazy, go all to cash and then the market rips. Like, there are cases where things like that can happen. But for the most part, if you just follow this very long-term consistent procedure and you have a diversified portfolio, you're very unlikely to have a bad outcome. And that's the whole goal, is like not to have a bad outcome. And so what can we do for that? And so you're right, when I was thinking about the name for the book, this is a little fun fact. My publisher originally wanted to call the book A Data Scientist Answers the 15 Biggest Questions in Finance. And I was like, that's the worst book title I've ever heard. I'm not joking. This is a real email I still have. And I said, that's the worst title I've ever heard. And I said, I think, and I'll come up with a better name. And then I realized, like, I'd written this blog post called Just Keep Buying. I said, you know what, that's the post. It just clicked. Once you know, it's a very hard feeling to describe. But for anyone who's ever had to name something or ever had to figure something out, like, oh, how do I brand this in a way? When that idea clicks, you just know that's it. And so I was very adamant about naming it and kind of saying, hey, this is the thing, and here's how I want to pitch it, blah, blah, blah. And so I was very, like, passionate about that idea.
Yeah. And even the original title, it probably would be the longest title ever that's being on the book.
Yeah. Oh, yeah. That's why we didn't use that title, and I didn't trust them. And I'm like, hey, my publishing company is great for what it does, but, like, they're not the best marketers. That's not they're not here. It's ironic that you think like book publishers should be good at marketing, and it's not really. They do many other things very well, and marketing is not necessarily always the thing that they do well.
Mm-hmm. Okay, so I think maybe the next question I want to ask, for readers reading or who's going to pick up this book, Just Keep Buying, what do you want readers to get out of this book? Is there any specific goals that you want to help readers, or you wanted to readers to, like, really understand and then get out of this book, or they can learn from this book?
I think the one thing to take away isn't, like, any particular chapter or thing like that, but the overarching philosophy of the book, which is evidence is far more important than logic in the world of personal finance, in my opinion, right? And the reason I say that is there's a lot of things out there that seem very logical at first, right? One idea is like, oh, if you cut your spending, you can get rich, right? And it makes logical sense, right? If you spend less, you can save more. If you save more, then you'd have more money in the future, etc. But when you actually look at the data, like, the people that save the most money are not those that have the lowest spending necessarily, right? It's actually the people with the highest incomes, right? And so once you see that, once you see, oh, wow, the top 20% of earners save so much more than the bottom 20% of earners, like, it's not a spending problem necessarily. And of course, we all know someone, like, I've met people that have very high incomes and they spend it all. And I've also met people that have very low incomes and they don't spend much of anything and they actually build wealth. So I know the exceptions, but in general, the general trend is that more income means more wealth, right? And so that's not talked about enough, I think, in the personal finance space. And this is where I'm like, I had to use data to fight back against the people saying you shouldn't get a coffee every day or a bubble tea or whatever it is that you're getting, because, like, that's the thing that's going to make you, lose your wealth. And it's like, no, that's not it. Like, enjoy the coffee, enjoy the bubble tea, like, whatever you end up having, like, keep those things in your life. If you really are worried about money, you need to focus on the income piece. And so that's where I want you focusing your attention, not stressing about a minuscule purchase, right? So that's where I think data and evidence are the key behind that. So that's the one takeaway. It's like, logic is great, but a lot of times you need to see, what does the data say? Because the data may not always agree with that.
Specifically for Taiwan, generally speaking, Taiwan, a lot of people aren't making that much. If we look at the median wage or income, it's not the highest in the world. So traditionally in the Taiwanese society, saving has been a very strong focus. And there's, like you said, there's probably similar sayings of like, hey, you have to focus on your saving. You have to save a tremendous amounts. And you put, I think there's a chapter specifically talking about savings and spending in Just Keep Buying. And it was the evidence that you show really kind of paint a picture for readers. So I think my next question, maybe my follow-up question is, because sometimes it's really hard for readers or an average person to go beyond the logic and then trying to find where's the evidence, where's the data, how would you advise them on like, hey, where to look into the data or how to get close to an evidence compared to logic?
Yeah, I think it really depends on the question, like where that data is going to live. But for example, I wrote the Just Keep Buying, as you know, for an U.S. audience, right? And I did this course. I'm doing this course right now with a Taiwanese company, which we can talk about more later. But in the process of doing this course for the book Just Keep Buying, I was like, hey, like I need to see how this applies in Taiwan. And like, is it true in Taiwan? Like, let's look at what's the equivalent idea in the Taiwanese data. And I found almost all of the same things. And one of the examples I found was there's some data showing that in Taiwan, the people with the highest salaries or who make the most save more. And once they broke the income into 5 quintiles, 5 groups, from the lowest 20% to the highest 20%, just like they do in the US, which is great, you can see the savings total goes up across those and the savings rate goes up. So it's one of those examples where it's something that we see in theory in the US data and we see it in practice in the US data. And then guess what? I also see it in the Taiwanese data. It's the exact same thing. And so you have to just dig around a little bit. But with AI now, you can be like, you can ask like, hey, show me like where can I find information on median incomes or this or that, whatever you're looking for, and it will find it for you. And trust me, I found it as someone who doesn't even speak the language. And I'm just saying, send me to this. I'm translating the website. I'm digging into Excel files that I can't always necessarily read and like translating stuff. And like I could find this information. So like you guys definitely can as well. But you got to look for it where you can, and it's not always going to be available, and that's just the nature of you don't have every data point at your fingertips. But the cool thing is you can look for it, and I bet you'll find that a lot of these things are also true that I said in, from American US dollar perspective are just as true with Taiwanese dollar, etc. And of course there's big differences between our societies, but at the same time, like there are some fundamental things like people generally that have higher income save more. And it's actually I think Just Keep Buying is an even better book for the Taiwanese market because people actually save money. Like the average savings rate in Taiwan is like 24%. In the US, it is not 24%, right? 40% of the country saves nothing, right? So it's like of the US saves nothing, right? So it's very funny because like, oh yeah, if you actually save and invest and do like, you can actually do quite well. But like the problem in the US is a lot of people just don't save money. And so it's not as effective there as it would be elsewhere. So that's another thing to keep in mind.
Got it. That's a good point. And even sometimes even people in Taiwan, they have a leg up compared to like people in US because of the daily habits and probably some cultural background.
Yes, of course. There's different cultures and beliefs you have about saving money, and it comes from family and structure. There's so many other things. Like it's much deeper than just that one belief. That belief is embodied across many other things. So yeah,
got it. So you briefly mentioned about the structure of the book because from the title, seems like it's probably like an investing book, but it's actually like a personal finance book. And the first part of it is focusing on savings. So I think we can follow this structure today and then talk about saving first and then maybe talk about some questions about investing.
Yeah, that works great.
So the first question I want to ask is, you talk about in the book, saving what you can. Invest what you can. Like you talk about save what you can, invest what you can, and let time do the rest. My question is, what's the hardest part for most people to internalize this?
I think most people, myself included, are just quite impatient. And I think with money, you really have to be patient. And the more patient you are, the easier it is to stay patient, actually. It's kind of a weird thing where like I would say I'm quite impatient with a lot of things in my life. But without that patience, you're not going to see this just incredible payoff that can materialize over time. And, I can give you an example. Like in my case, I've been investing for about 12 years, 13 years now, since 2012. So it'll be 13 years basically. And my portfolio generates more in a conservative year now than what I made in my first year working, right? And so it's like I'm not saying that that's going to happen that quickly for you. Within 12 years, your portfolio is going to generate more, but it might take 15 years. It might take 20, whatever it is. Like, you're going to see that, like, it's going to start making more money than you could have made in a whole year, right? And this isn't a conservative year. If I get a 5% return, it's more than I made than when I was 23 years old, right? And that was me working for an entire year. And now I get that through a passive, just the market going up over time type of thing, right? And once again, 5% is I would say it's relative on a nominal return. I say it's conservative. Inflation adjusted, it's probably fairer. But let's just say on a nominal return, like 5% a year, that's still great, and you can get that. And so, just seeing that type of return, you're like, oh wow, and that adds up over time, right? And so I think the thing to do is how can you keep your patience, and how do you build that? Mm-hmm. And it just takes years, and there's no shortcut. If you do this for 6 months, like it's not working, like of course it's not you've now given the time yet, right? Yep. It's funny if you actually go on the US on Amazon and you read Just Keep Buying and you read the reviews, the worst reviews, the highest upvoted, like the best worst review, or most helpful worst review, was written in October 2022. It was 6 months after the book came out in the US. Okay, and it said, all I did was just keep buying, and all I've done is lost money. Now, once again, this was from April 2022 to October. The guy gave it 6 months, said I lost money and gave up. Since then, the market's up. I don't even know how much. I wish I just knew the answer to this. Because every time, at one point it was, it's like the United States stock market's up at least 50% since then, right? It's crazy how much it's up, right? And it's like, this person took a very short-sighted thing and then used that to then critique the book. And I was just like, dude, you only gave it 6 months, man. You didn't give it the time, and you're critiquing it on that 6 month window. And I just think that is not the way to kind of invest. And if you're doing that, that's the problem you're going to run into.
Got it. Is there any example or maybe some advice on being patient?
I think it's really tough. And I say this because I'm incredibly impatient. I live in New York City, or I technically Jersey City with the area, but like it's very fast paced. People walk faster here. It's true. Like if you live in a city, you walk faster. Things are quicker. Like every minute you feel like you have to be doing something. I might have to be writing a blog or out to dinner with friends, or I need to be maximizing my time. And there's that feeling of that because other people give off that energy as well, right? So I'm in a world where it's very hard to be patient, but you need to learn to be patient with certain things. And I think you can be impatient as a person, but you have to compartmentalize that impatience. So I have a lot of impatience with a lot of other things, and that's true. But with my money, I have to say, hey, just give this thing time and wait. And I'm saying now, like I never could have seen a lot of the stuff that I've seen happen with just my investments, right? And it's not that I've been like the greatest investor ever. I've gotten like an average return over time once again, but it's like I've stuck to it and I've stayed diversified, and I haven't, when things crash, I don't panic. Like I'm not worried about stuff. Like when things do well, I'm not euphoric and like changing my strategy, right? So I've created something that works long-term for me. And so how do you build that patience? I mean, you have to just find ways to believe. If you have to believe it, really. If you believe this stuff, the patience comes. If you don't believe it, then you're not going to have the patience. And so I think you need to just study the evidence and look at history. Like things repeat themselves in very weird ways. And once you realize that, I think the rest becomes much easier.
Got it. And I think that really it has to do with a lot of like psychological and then obviously the emotional side of, investing or building wealth or savings, or even just your own relationship with money. How do you take it? And it seems like coming from you, looking over the logic and focusing on the evidence, I think will tremendously help with the emotion side of impatience and maybe that anxious with money or with your personal finance.
Yeah, it definitely can. And so I recommend people study the history and also find what works for you. Because like I'm saying this from like, hey, this is what worked for me. You may find something else works better for you, but like anything that lets you stick to the plan, if that means, I know, you have to like know yourself really well. Like, I know if I look at this, I'm going to be tempted to go and sell it or something. Don't look at it, or look at it in a different, like in an aggregated, like always look at your portfolio performance, never any individual position. Because if you always just focus on the worst performer, you're always like, why do I own this? And then you'll sell it. But it's like, that's the reason is you own it now and it's not doing great, but in another period, it may do much better. And so you have to think about that more holistically, right? So I think that's the hard part.
And we're talking about savings, and then in the book, obviously you talk about savings and you talk about spending as well, because it's an important part in the formula of saving, because you have income minus your spending equals your savings. I'm just curious, what's something that you personally spend a huge amount on without feeling guilt, and why? And I think I think a lot of people probably experience this. Like you go out there and you want to buy something, you want to spend something. It's almost Christmas. It's Black Friday next week. There's a lot of shopping opportunities, no doubt, for everyone around the world. But how do you deal with the emotions that come with the spending? And a lot of people come up with, they buy something, they feel guilt about it. And then you talk about it in the book as well. I'm just curious about you personally.
Yeah, so everyone has their thing. I think for me, it's realizing what do I prioritize and value. And like, for example, I don't spend a lot of money on clothes. I don't own a car, right? I know in the US you kind of have to own a car. I happen to live in an area where you don't need to own one.
Yeah.
But I do spend a lot of money on restaurants. And, my wife and I are foodies. We love that. And we love going all out once in a while and going to a really nice restaurant in New York City. And I don't have a problem with it because it's an experience. It's a shared thing. We talk about it later. We love food. We love like how you can take these very distinct flavors from all over the world and mix them and create a new experience for someone. You can keep creating new experiences, which I think is kind of interesting in its own right. Like when you buy a piece of clothing, like the clothing, the experience, you can have different experiences in the clothing, but not all that different, right? Okay, like I can wear it this, I can wear it that. Like with food, there's so much options out there, and especially in New York City, because there's such a great food scene here, I can try everything under the sun. And so for me, that's the thing that's like very intriguing, and the thing I like to spend a lot of money on, and I don't feel bad about it because I'm like, hey, I worked hard to get here. I'm still building wealth while spending that money. It's not a big deal. At the end of the day, once again, we are trying to balance between the present and the future. That's the whole premise of this. I'm not saying save all your money, invest it all for the future, and I'm not saying spend it all now either. Like you have to find what's that balance, and I think this is kind of one of those examples of how do you actually do that. And I love restaurants, right? I didn't used to always splurge on restaurants when I was much younger. Like when I was 23, I didn't have money to do it. But as I've built wealth, I've given myself more and more freedom to do that. And now to this point, there's almost nothing like I won't get at a restaurant. You might hear like there might be like some really extreme like $1,200 a person, like that, like insane amount of money, like USD. I don't do crazy. Those, but outside of that and like really, really expensive bottles of wine, outside of that, I don't have any sort of limits on myself when I'm at a restaurant, right? So I'm like, if I want this entree and it's a little more expensive, I get it because I've worked hard, and that's my treat to myself. So I think you have to find those things, but you have to also work towards it. If you have $0, like, yeah, you can't be doing that right now, but work towards it, work toward the dream that you care about, and whatever that thing is. And don't feel like it has to be restaurants. Like if your thing is handbags or your thing is, whatever it is, right? Classic cars. Like there's so many different things you can spend money on. Whatever it is, find how you work toward that goal and then work toward that. That's the thing that's more important is like, prioritize something and then go from there.
Got it. I'm here. Yeah. Prioritize, very important. I think two important things that you talk about. You don't own a car, but you prioritize the dining experience, and especially in New York, probably one of the greatest city in the world to experience dining and to experience different food. Second thing, I know a lot of listeners right now, you're probably not from New York or probably not living in New York. For Nick, can you give us at least one recommendation for restaurants to go to, you have to visit in New York?
I really like, let me think of a new place I've been. Because my favorite place of all time was called Momofuku Ko, by David Chang, but that's now closed down and that's now a different establishment. I like Jungsik a lot. That's a Korean place. Very good. Wow. It's like a kind of a Korean fusion type thing. I'd recommend that. But that's, once again, this is like a high-end, very expensive restaurant. If you want something that's just a little bit more like, once again, because this is such a difficult question to ask, especially me, because like there's so many different types you can get into. Okay, this type of food, that type of food. You want sushi, right? I would say go to Sushi Yasuda. That's like my favorite sushi spot, and it looks just really classic and amazing. If you want like a burger, you go to Ashaval, it's technically a Chicago place, but there's one in New York. It's kind of in the, I think, the Tribeca area a little bit. But like you can kind of like you give me a name and I can be like, okay, let's go here. Let's think about this. You want steak, you go to Peter Luger, or you go to Strip House or something, right? It really depends on what your flavor is. But
so I guess this deserves another episode, specifically on dining out in New York.
Yeah, on your way to the restaurant. Yeah,
yes.
We changed the name of the podcast.
Yeah, and Taiwan has great food, good food. You have to come visit, sometime in the future or maybe next year. And then
we definitely will.
All the good food.
We definitely will. My wife and I, my wife has always wanted to go to Japan, and so we went last year after we got engaged. And she wants to go back, and I'm like, babe, we have to go to Taiwan as well. We can't not go to both. I have to do both, especially because I have some friends there, as I mentioned earlier. But especially because the book's doing well, I have to go there, and it'd be cool to do media and meet some people and stuff like that.
Yeah, we'll do another episode on food in Taiwan, but that's for that's for the future. So let's focus on, I think, for the savings part. One last question. You touch on it a little bit, but I want to ask, what's a piece of commonly accepted financial advice that you believe is actively harmful for most people?
Yeah, I think I kind of just talked about it a little bit, but the idea, and I think a lot of personal finance experts, at least here in the US, say never allow your lifestyle to creep, right? And just as a quick reminder, lifestyle creep means spend more as you earn more or have more wealth. I like to focus on wealth more than income because wealth's a little bit more permanent than income, in my opinion. So, but I think most personal finance experts are very against lifestyle creep of any kind. They're saying hey, don't ever let your lifestyle creep. Live like a college student forever is what they say, right? But I'm definitely for it within limits, right? And I think you should reward yourself for working hard and building wealth. I don't think you should feel guilty all the time. I think that is more destructive to your mindset than anything else out there in terms of harm. I don't think there's that many things that are, quote, harmful to people in the personal finance space, but I think that one is probably the most, on at least a mental. It's a constant guilt, and I talk about this and Just Keep Buying. And I think it's a bit overkill. I think we need to relax a little bit about this stuff. It's you only live once. That doesn't mean that you should go all out all the time. I think there's ways of doing this that make sense. And I think, most people are, at least I've seen quite a lot of people, especially if you're reading a personal finance book, you're probably more likely to be guilting yourself than the opposite, right? If you're not, the people that are spending all their money all the time, let's be honest, they're not reading personal finance books. They're not reading Just Keep Buying. So I don't need to cater to them at all because they're out living their life already. But people who are reading personal finance books are thinking about these topics, and of course they're thinking, oh, should I do this? Should I not do this? And I think it's harmful, unfortunately.
Yeah. So sometimes prioritize, and sometimes it's okay.
Yeah, exactly.
Okay. So let's move on to, now we've covered savings. Let's move on to investing. You outline in Just Keep Buying 3 reasons for investing. Number 1, save for your future self. Number 2, protect your money from inflation. And number 3, to replace human capital with financial capital. I think the first 2 points are easier to understand. It's just really straightforward. Think about future self, your retirement, and protect your money from inflation. Everyone sees food price or prices go up every now and then. But I want to focus on replacing human capital with financial capital. Why is that concept so important?
I think people understand that they have some ability to work, and that ability to work is going to naturally depreciate with time, right? So whether it's your body, your mind, or just your willpower, you may still have a good body, you may still have a good mind, but at some point you're like, gosh, I've been working for so long. I could do this, but some people just get fed up with stuff and has nothing to do, and they could be young and healthy and everything. They just get tired of it, right? So at some point we won't want to work anymore, right? That's our human capital diminishing over time, right? And so to ensure that we still have income once we no longer work, we have to rebuild some of our some of our human capital as financial capital, right? So I know in Taiwan, there's a lot of pension programs and things that cover that. So a lot of your income while working will be covered by a pension for most people. But still, it doesn't cover 100%. So there's going to be a shortfall. So without you saving for that little bit, right, you're going to then have to live on much less, which could be very difficult, depends on your situation and, all these different things. But I think thinking about that, it's okay, we need to find ways to take that extra savings we have, invest it as financial capital that can earn income for us, right? And so you really have to think of human capital and financial capital as substitutes, as say, hey, I can take this, my time, energy, whatever, I can put it into this thing, get financial capital, that's from a job, from a side hustle, whatever, and then I take that thing and I reinvest it, and that money starts paying me as if I were still working. And of course, it's not one-to-one. It's not like every dollar you invest gives you $1 back. Wouldn't that be great? 100% returns like every year. Of course, it's not. It's a much smaller percentage, right? You're going to get 4 or 5% a year, right? So for every Taiwanese dollar you invest, you're getting 5 cents in this case. And I don't know if do you guys use cents? I don't know if you do. I don't know how that works. Right?
That's the lowest.
For every 100 Taiwanese dollars you invest, you get $5 back. Yeah, exactly, $5 back. So that's the whole idea. You get 5% back, and that's a way of thinking about it. And so when you realize that, then that means it takes time. It's going to take you time to save up enough for you to replace your income. But that's the thing I like to focus on there.
Because I think one of the most important concept is that as human, like our ability to generate income proactively, actively, or our value of human labor will diminishing over time or as we age. So it's really important to kind of replace some of that with the financial capital and with income producing assets. So that's one of the a really major point that you wrote about in Just Keep Buying.
Yeah, that's the one thing you have to do over time. There's just no way around that.
Got it. And the second question is, you mentioned investing is simple but not easy. What emotional bias destroys the most wealth? I think we talk about this as well on the emotional side, but just curious about like specifically what kind of emotional bias destroys the most wealth.
So there's different ways of looking at this, right? So the emotional bias, I think it's going to be fear and greed, right? Those two together. You can think there's a lot of things we can discuss within those two. But another bias I want to talk about, which is not as emotional, but it's more of I think it's a bigger problem as a bias, but it's not necessarily an emotional bias, is selection bias. Now that's kind of like a data bias or a statistical bias. And the idea behind selection bias is you have a view of the world because you've only looked at a subset of total data that's out there, right? Like if you went, I'll give you a very simple example here in the United States. If I only spoke to NBA players, I would think everyone was super tall. Like, I'm like, oh, everyone's tall. Like, it's like, yeah, you've only talked to literally the tallest people, right? That's not, you're obviously selecting for a certain group. That's not really indicative, or it's not representative of the population as a whole, right? I think the same thing happens in financial markets all the time. You hear about the person that had a really crazy return in a meme coin or some cryptocurrency, whatever, and they made 10x, 100x, whatever in like a month. You very rarely hear about the person that lost 80 or 90% in a month. You don't hear, because that doesn't make a headline, that doesn't get attention, right? It's still terrible that it happened, and it's also unlikely that that's going to happen too, right? Both of these events are unlikely, but when you go out there and you just start talking to people, you're only going to hear about the really magnificent one and the person who did really well. You're not going to hear about the other. And once again, that is a form of selection bias, right? And even, I know this guy that bought all these individual stocks, he's crushing it. It's like, yeah, that's a form. He only bought a handful of stocks, and maybe he got lucky, maybe he's skilled. You don't know that, right? It's hard to know that in a short time period. If he's been doing it for 30 years and he's been consistently outperforming the market, then yes, they probably have skill, but it's hard to know. And once again, your selection, you could be selecting for a person or a specific period of time that's not representative of the whole. And so I think that those types of issues happen all the time in investing, and it's something that people overlook. And so I think that destroys a lot of wealth too, because people are focusing on the wrong things and they're only selecting one thing and not selecting the full portfolio to see kind of how things can actually develop. And that's true across history as well. I think time period selection bias is a big issue, just as much as, which asset classes you look at, or even within an asset class, if you only look at certain stocks or certain individual assets within a larger asset class. I think that's also a problem.
Got it. And then through or by entering or people having selection bias, they would make decisions based on the selection bias, and then it would just kind of increase the possibilities of them losing most of their wealth because they're chasing something that is just maybe only occur in a very rare moment.
Yeah, that's one piece of it. I mean, I think this is true of just people in general. This has nothing to even do with investing, but like our whole life is selection bias, right? You have a specific set of experiences that are unique to you, and those experiences determine how you view the world. Just like I have a certain set of experiences, right? Like imagine every time I saw, I don't know, a cat, I was attacked by a cat. I would always be afraid of cats. I would always think cats are violent. And someone else would be like, what are you kidding? I grew up with cats that were so loving. And like, we're going to have very different experiences just because of a random set of occurrences, right? When the truth is like, yes, some cats are violent. Most of them are not, right? But like, if you get the wrong like experience or you have one bad experience, it's going to taint how you look at the world, and it's gonna distort it in some ways. And so that's true across that's part of your life, but I try and focus on where does that come up in investing, because that's where it's applicable.
So the next question I want to ask is, many people fear investing because they don't want to lose money. It seems like it happens all the time. The market's going down, the market's going up. So I'm just curious, what's the hidden cost of not investing? Right, that's kind of the main concept of the book, but a lot of people are they're afraid because it's it can be volatile, and there's the selection bias. The stories that people heard were not the good ones, but the bad ones. So they stop themselves, or they refrain themselves from investing, from going out and trying to purchase the income producing assets.
Yeah, so there's a lot of ways you could answer this. I think the way when you ask me like what's the hidden cost of not investing, and the answer for me is inflation. It's year in and year out inflation. And it's the question I ask someone, so I don't want to invest. I'm like, okay, so why? And they say, oh, because I don't want to lose money. I was like, okay, so do you want to risk losing money in the short term, or do you want to guarantee that you lose money in the long term? Because that's what you're trading off, right? When you're saying I'm not investing, great, I promise you're not going to lose any money in the short term. You're going to be fine. But in the long term, you're guaranteed to lose money, right? Assume like, I mean, there are very few societies where there hasn't been inflation over like a multi-decade period, right? Japan was one that had a little bit of that going on for a period, but that is not an economy that people were like thrilled about. It was not a good time to be in Japan from 1989 through. I mean, from a financial perspective, completely. Like as an investor, right? The economy was not booming in the way it was in the decades before the late 80s, right? Before the 90s, at least. So you think about it that way, and you say, okay, like, do I want to just, I have to take some risk, and yes, I could lose some money in the short term, but I'm very likely to build wealth over the long run. Right? Or you just say, hey, I'm just going to not participate, but then you assume you're going to lose, let's say inflation's 2 to 3% per year. That's what you lose every year. It's a tax on all your money, and it's compounding against you. It's not a one-time loss. It just keeps going and going, right? I mean, there's this, in Alice in Wonderland, there's this idea of this woman called the Red Queen, and the idea there is like you have to run full speed to stay in the same place. And the reason why is because there's competition in the world. This is how nature works. Like you always have to keep working to keep up. And why is that? That's what inflation does, right? If you just sit here and say, I'm not going to do anything, I'll be fine. Like the world's going to move ahead of you. Prices will go up, things will get more expensive. And you sat there doing nothing. And now you're sitting there and you're like, wow, I can't afford this. Like imagine a retiree, even 10 years ago, I think in the United States, how much housing prices have gone up. Food price, all these things which weren't expected at the time, but they happen. And now it's like, oh, I thought I was going to be fine, and now maybe I'm not because inflation was much worse. So if you had invested in income producing assets, you've kept up with that somewhat, right? And I think that's the way to hedge against these types of changes.
Got it. So it's instead of looking into like specific, investing stories or even the stock market, you're looking at, or everyone should be looking at like inflation and looking at the money, like their relationship with the money, right? And so if you look at it from a very broad perspective, you have to find a way to participate. And I think the book is just a great entry, and then just kind of a welcome permission for people to participate in a very straightforward and easy understanding way of like, hey, you gotta invest. And then it also outlines a multiple different ways to invest, instead of like, hey, you have to pick one stock and then just ride with it.
Yeah, exactly. And I think the other thing too is like if you're worried about losing money, like you can diversify. Now, it doesn't mean you're never going to lose money, but it changes the risk profile a lot, right? Like if you're like, oh, I need to have at least this much, okay, put that much in like a time deposit or something. Like there's ways you can like, okay, that's the amount I know I always need to have, and I'm going to have it at some point in the future. And then you have some amount that's saved in a checking account of some sort, and then you have the money you're okay to risk. And like you can break it up in different ways. There's a lot of ways to do this. So I'm not saying you need to have all your money in stock. That's never what I would say, right? Because it's very dependent on the individual. But you need to have something in there, and it's figuring out what's the proportion that makes sense. And maybe right now you don't have enough money yet to even do that. That's fine, but you got to build to that. And then once you have some, then you start investing in that. So
got it. So maybe can you tell us a little bit more about diversifications? If you like, again, you don't know this person, but maybe this person is from Taiwan, and you talk about diversification. He's pretty new to investing. What kind of advice would you tell him? Like, obviously, you tell him keep buying, diversify. What would be next?
What are you diversifying into? And there's different ways of diversifying. I think we can talk about that a little bit in terms of like, okay, there's different asset classes. There's stocks, there's bonds, there's real estate, right, etc. In addition to that, like you can diversify within an asset class, so you don't just own one stock, you don't just own one, I don't want to say one real estate, one property. You could own it through a REIT or something like a managed set of properties, right? Like a diversified portfolio. That's another way, right? In addition, there's geographies, right? I know there's always a lot of home bias. Like, U.S. investors generally own more U.S. stocks, but I mean, the U.S. is the largest market, so owning more kind of like makes sense because, it's also the largest market relative to the world. I don't know if that makes sense for a Taiwanese investor to say, okay, well, I'm just going to own, because the U.S., if I do market cap weighted, then the U.S. is like 60, you'd have 60% of your money in U.S. stocks and very little, I think only a few percent in Taiwanese stocks. I don't think that necessarily makes sense, right? Because those companies a little bit more, you feel more comfortable. So maybe you would split your money between like 50% Taiwanese and of the equity money, at least, just that piece, just the stock money. You'd say, okay, 50% Taiwanese and 50% everything else, which includes the US and other developed markets, right? So you can imagine breaking that out in a different way. But there's a lot of different ways you can do this, and there's no right way. And we could definitely get into that. I think it's really based on individual preferences. It depends on where you work, your individual risk profile. Like, are you working at a company that's very exposed to the Taiwanese stock market? If so, then maybe 50-50 is not right. Maybe you need to own even fewer Taiwanese stocks. So you need to have a slightly higher international allocation in case something happens to that company. It could impact your job. It now impacts your wealth and like the economy. Like, it impacts everything. So you might want to hedge against that a little bit. So just another way of looking at this problem, because it's a difficult problem. And obviously there can be access issues and fees. I know there's taxes that the U.S. imposes, so you might have to get it through an overseas broker or something. There's a lot of ways you have to think about this. That's a little bit more technical. And I talk about some of this stuff in the course that I do, but there's a lot more detail we could go there.
Yeah, obviously it's a whole world if you want to start looking deeper into it. But we're talking about the broad concept, and then just really an entry point for people to start taking action and be patient with their investing, and then know that there's a concept that you need to diversify, whether it's a stock or equity or real estate or other income producing assets. And I think moving on to the next section, it's just kind of like more Taiwan focus or behind the scenes of the books. There's a couple questions I'm really curious about. When you first learned that Taiwan was the #1 market for just keep buying, what went through your mind?
I was surprised. I was like, what? And then I was like, wow, that's so nice. I was like very delighted that had happened, right? I was like, I just had no clue that my ideas would be as popular in Taiwan as they have been, right? And then as I said, I wrote it for a U.S. audience, and ironically, it's done better in Taiwan. And once again, we've talked about some of the reasons why. The higher savings rate's a piece of it.
Yeah.
I think obviously Taiwanese investors and just Asian investors in general, they have, because they have higher savings rates, they tend to also have more money to invest. So like, hey, I need to diversify. I can't just own only Taiwanese stocks. So they're like, oh, I need to buy some U.S. stocks. And look, here's a book on U.S. stocks. Yeah. So it just happened to fit. Obviously, markets happen to be going up as well. I didn't obviously know that was going to happen. Like, I released Just Keep Buying in 2022. Japan shortly thereafter hit their all-time high after they hadn't been for 30 years. That was just random luck, right? So there's like things like that happen. Obviously, Taiwan's also near, I mean, it's not this particular week, but it was near all-time highs very recently, right? So you can just see all that stuff is kind of moving in that direction, right? And so it's just something to keep in mind. And it was a slower start, but it did eventually go to number one. That was kind of crazy for me to hear about, right? Like as I said, last year in 2024, my best market was Taiwan. I sold 79,000 copies, right? It's almost 80,000. And it was, it's great to hear, and I'm glad it's resonating with people, and I'm happy to chat with more people and kind of hear about it and see what I can do to help and translate this idea and say, like, how does this actually work in Taiwan? Because I just wrote it for the U.S. market, but I could just take these ideas and translate them and kind of not just literally translate them, but like, economically and philosophically translate them to a Taiwanese, mindset, so to speak.
Follow up on that. In the very last chapter of your book, you talk about a quick game, time traveler's game. So let's play a quick time traveler's game. If you were to go back to the time you were writing this book, and you got some information that Taiwan might be an important market for your book, and that's it, how would you done differently with the book? Would you add anything to it, or how would you structure your book?
I think there's two things. One of these, I'm going to answer this without even having anything to do with Taiwan, because I have some information that's happened since the book came out, but I can also relate it to Taiwan as well. But I would have done a little bit more on inflation. I didn't realize inflation was going to kick up as much as it did after the book was published. I mean, remember, I was writing in 2021, inflation was still low then in the United States, and then it got released, and as it was getting released, like, inflation was coming up, and I would have talked more about inflation in general. That's one thing I would have changed. But if I had known it was going to do better internationally, I would have put more international stock examples in there. I would have included Taiwan. I had one chart on Japan, but I could have included more there. Like, there's other markets I could have included. I could have talked more about international diversification, which I just talked about stocks a little bit and a little bit about international, but that's a whole section I could have really dug into. And in particular, I think also if I'd known it was going to do better in Taiwan, I would have come and like toured and done more inside the country. You just don't know. Like, I'd like think because the timing, once again, I'm not just trying to blame my publisher, but it really is the publisher's fault, because I put out the book, right? I don't get my statement from the prior 12 months until 4 months after, right? So I hear about, or 4 or 5 months after. In May of 2026, I will know how well I sold in Taiwan in 2025. So I'm not going to know till May. So now I know, obviously, it's done well, but like, you have to realize, like, just, and also from timing, how it worked, because when the book came out, it was like kind of, I think, a little bit later in the year. I can't remember exactly, but when it came out the first year, so like my first year sales, I sold like, I don't know, 30,000 copies, which is great. It's still like, that's a great thing in itself, right? But I was like, oh, that's cool. But like, because it had come out later, I didn't realize that there was like this momentum. And so then the next year when it was 80,000, I was like, oh, wow. So that's actually much crazier, right? So it's one of those things where you don't exactly know how it's going to play out. And so I think because of the timing impact as well of how long it takes to hear about this stuff, that also changes things a bit for me. So I wish I had known more quickly so then I can do stuff, because I'd be like, oh, let's do some media. I would love to get interviewed. Like, the fact that this is the first thing I've done for any sort of Taiwanese podcast is like kind of crazy in my opinion, especially if you're the publisher. Like, wait, let's get him on a few podcasts. They have never talked to me. They have never spoken to me about this. And I'm not blaming them or upset at them. It's just a slower industry. And so I think because of that, like, there's more I could have been doing, and just in terms of media that I would have loved to do, and hear from Taiwanese investors and hear pushback, because not everyone's going to agree with this. I want to know what's the type of things that people, because I know how a U.S. investor pushes back, right? I've talked to so many of them, but how does a Taiwanese investor push back, and what's their thinking, and where are they coming from? What's their perspective, right? Like, inflation wasn't really an issue in Japan, for example. So for a lot of them, like, trying to explain to them inflation, like, yeah, your money, you put it under your mattress and you bring it out a decade later and it's not worth as much. And people don't get that, because in Japan, it was worth as much, sometimes even more after a decade, right? Which is crazy to say. But that did happen in Japan, and that's not typical for most developed economies. So that's just something to keep in mind here as well.
Yeah, got it. Yeah, I mean, there's still a lot of like content about Just Keep Buying in the traditional Chinese or in Taiwan market. A lot of people have done book reviews, talk throughs and on podcasts and on YouTube, and that's one of the reasons that I think it's done so well in Taiwan, the book alone. But we'll definitely love to have you, contribute and talk to more Taiwanese investors and different podcasters or influencers and get their opinions. I know you have a course. That'd be awesome. Yeah, I know you have a course coming up specifically about Taiwan. For Taiwan, you kind of hinted it in the beginning of the episode. Do you want to talk a little bit more about what this course is? Why is it for Taiwan? What can we expect from it?
Yeah, so I basically took my book, Just Keep Buying, and I said, hey, let's actually apply it to a Taiwanese market. Like, let's actually go and say, let's say I was doing this in Taiwan, how would I have written the book? And like, I'm not obviously rewriting the book, but I'm taking a lot of the ideas and I'm applying it. And so I'm saying like, okay, for example, from the year 2000 to 2025, if you had invested, 100 Taiwanese dollars into the U.S. stock market, it would have become, I think, like 741 Taiwanese dollars from 2000 to roughly October 25, right? So that's when I pulled the data. If you did the same thing in Taiwan, I think it would have been like $689. So it underperformed a little, right? It underperformed. It wasn't as good. And once again, this is even U.S. from 2000 to 2025, right? And then 2000 was already kind of an elevated period, .com, et cetera. Yeah. So overall, if you look at the simple snapshot, you'd say, oh, Taiwan underperformed the U.S., right? But if you had invested 100 Taiwanese dollars per day into the stock market, into both markets, right, the U.S. and Taiwan outperforms by like 13%. So it goes from underperforming by like 7 or 8% to outperforming by 13% because you had bought over time. And the reason for that is, well, how is that true, Nick? So like Just Keep Buying works even better in Taiwan than it did in the US over the last 25 years, which is kind of crazy to say. It's like, how can the losing market or the underperforming market actually make you more money? And the reason is, well, when you buy more shares at a lower price, if that thing ever recovers, all of those shares, which you bought at a lower average price, recovered together, right? And so that's like one of the examples I give in the intro, where I'm kind of showing people like how this works and giving them like some basic understanding of like how to think about this. And it's like, wow, that idea is very powerful, and it works even more so in a country where maybe there was a period of stagnation. Once you get through that period of stagnation and then the market does start to go up, all of those shares you've been buying at that low price, they're now all much more valuable. And so you make so much more than a market that's just going up steadily over time, right? You can imagine like 3 different scenarios. One where the market shoots up instantly and then is flat. The market is, slowly going up. So imagine just like a straight line going up. And then the last one where the market's flat for a long time and then shoots up at the end. When you're buying over time, I mean, if you put just an investment in 100 Taiwanese dollars into those 3 investments and just one time, they all end up at the same spot at the end. So it doesn't make any difference. The path doesn't matter, right? The path of how you got there doesn't matter. But when you're buying over time, it completely changes the calculus, because that asset that was flat and then shot up at the end, you just bought a lot of that asset cheap, and then it just shot up and you just made a ton of money, right? The one that shot up initially and then is flat, you made a little bit of money initially and then you made nothing on all the rest of your purchases, right? So that's an example of like, oh wow, like if I'm going through the best time to be buying is when kind of the economy's stagnating, because it's not going through a lot. And if it ever gets out of that funk, which many economies generally do, that's when you make a bunch of money, and you have to wait for that period. So that's just like a simple example I use in the intro, but it goes to show how effective this can be, especially in Taiwan. And once again, I didn't write it for this market. I happened upon this and I say, okay, how do we apply this? Like, let's look at the income data. How does that work? Let's look at the spending data. Let's look at how would a Taiwanese investor diversify? We talked a little bit about it on this podcast, but I go a little bit more in depth in the course, right? Market timing stuff. Should you buy the dip? People talk about this stuff all the time. I'm like, well, I showed it didn't work in the U.S. in the book. What about Taiwan? Let's go look at Taiwan. From the data I have going back to like 1990. Is that true? Like, and I discussed that as well. So there's a lot of times where I said I really took this book and I said let's apply it to the Taiwanese market, and let's apply it to like how a Taiwanese investor might look at something. And that's what I did with the course. And I basically just wanted to make it a little bit more relatable. And it's like if I had the time to write it just for a Taiwanese audience, I would. But it's like they already have the book, which they like. So I'm like, let me just make it into a course so it's a little bit more interactive, and people will be able to write questions to me and I can answer them, and I'll make myself available for that as well. So that's also what makes it kind of cool.
Yeah, that's great. I mean, like just specifically a lot of, because we talk about, I think one key takeaway for me is evidence over a logic. And then in the course, there's more data. You look into more data and evidence and charts in specifically for the Taiwanese market. And that's something that people can, or readers who have read the book want to learn more about Taiwanese market can get out of.
Yeah, exactly. And that's the goal of doing it. And so I'm happy to partner with Master Talks on that.
This has been a great show, and I think probably readers or listeners, they've learned a lot. What's something that you hope listeners, audience, readers will take away long after the podcast ends? What's something that you want people to just, the key takeaway you have to remember this even after this show or the podcast ends?
I think the key takeaway is you have to remember that markets are inherently volatile. And so you're going to experience periods of stagnation. And this has happened before. Like if you look at just the Taiwanese stock market, you're going to experience periods of stagnation. The way you get over this mentally is you diversify. And you own other asset classes, and you don't just diversify outside of Taiwan. That's great. And you don't just own the US. You can be like, oh, I'll just own the US and Taiwan. That's enough. I think you should consider other markets as well, other asset classes. I think there is evidence that these things can be profitable over time, and don't look at any one of the assets at any point. If you just focus on the worst performing asset, you're always going to be like, why do I own that? And then you're going to sell it, and then in the next period it may do better, right? And so it's very tempting to do that. But if you look, and I talk about this in the course a little bit, like in 2000, 2009, US was one of the worst performing markets in the world. From 2009 to now, it's the best performing. So like these things flip all the time, and you just never know when it's going to happen. So just keep that in mind, be diversified. There's going to be difficult times. You got to just stick through it. That's the hard part. And it's easy to say, and it's easy to say, well, markets are still, on relative highs right now. It's very easy to say that. It's much harder to do it on the flip side. But, once there's been a, 2-3 year period where we haven't seen gains, that's when the book comes in handy. That's when the book's the most valuable. When the market's going up, it's a great book, whatever, but like, it's not as helpful. It's helpful when you're losing all faith. That's when I want you to read the book.
And it's just one last thought, because the book come out 2022, right? And then the
23. I think the Taiwanese edition, my book, the English version came out in 22. I think the Taiwanese either came out late 22, maybe early 23. I can't remember exactly when it came out.
Because it was an interesting timing, right? Because the market was generally down 2022, and then even most of 23, and then it picked up. So it's kind of like that cycle. People experienced that cycle. Market was down. 24, 25, the AI boom or whatever, it's going up. And so that people were riding the emotional roller coaster with the book. So it's like there's a lot of points maybe in the book that people started to resonate. And I think it will resonate more going forward as we face the future or the market, because it will be volatile, right?
Yeah, it's going to remain volatile. It's how it is, and you have to realize that there's no shortcut, there's no easy way, and if you think you found one, it's unlikely to be the case. And it does sometimes happen, but it's very, very rare. And most people that think they found the easy way, they get lucky once, they can't keep getting lucky forever. And I've seen the people that have hit it rich and then unfortunately have lost it all. So you have to be very careful in that regard.
Yeah. Got it. Well, thank you so much for your time. This has been a great talk. Thank you so much, Nick.
I appreciate having me on, Tony. Thanks.
好，那谢谢大家听完了今天的一整集的节目啊，不知道大家有没有什么样的想法，或是说，这一集有学到了很多东西呢？也欢迎跟我们说，不管你用私讯的方式，或者用 email 的方式呢，很期待呢，在接下来的 bonus track 访谈系列之中呢，找到更多不同的来宾呢，来分享他们所见所闻，以及他们分享他们的故事，以及他们所面对的可能是人生上啊不同主题的心得，以及他们的这个学习到的课程。今天最后的时候呢，我跟 Nick 我们有讨论到嘛，就是他其实在写完了《持续买进》这本书，其实他还有写了第二本书，叫做《The Wealth Ladder》。那这本书呢，台湾应该也会出，只是 现在呢是有英文版的。那我现在来看，我们之后呢可能也会再录一集呢来讲这个 The Wealth Ladder， 就是他把这个个人的财富呢分为不同的很像阶梯一样啊，或是说就是不同的 level 这样子。那每一个 level 呢可能会有对应的他提供的建议呢，怎么样去打造财富，或是怎么样呢从阶梯的 level 呢往上一直往上，我觉得也是蛮有趣的一个概念啦。除了这个之外呢，我们今天最重要的是要讲到说，他在节目之中有提到他有跟 Master Talk 台湾的一个平台呢一起合作开了一门课程这个课程呢是专门为台湾的受众呢来去打造的。因为呢他其实在持续买进这本书里面，他并没有特别的提到台湾的投资人或是呢台湾的所有的这个读者啊或是听众啊，要怎么样呢好好的去运用持续买进里面的内容来去做他们自己生活之中的投资，或是说实际的应用。所以这门课程呢会有非常多台湾相关的数据。Nick 呢他其实在节目里面呢，我自己呢学到了蛮重要的一点呢，他其实有讲到的是，很多时候我们都倾向呢去listen to the logic， 或是说我们去 follow 这个 logic， 就是这个逻辑，逻辑好像是对的，或是我们会说谁谁谁说，他们说就是这样啊，他们说理财就是要这样啊，投资就是要这样啊。但他身为一个数据科学家呢，他其实不只是每天他在他的部落格，甚至是在持续买进这本书里面呢，他是大量的引用了非常多的图表和数据呢，来去织出他自己编织出他想要的叙事，还有去找出说原来用这些图表呢，用这些他在访谈里面讲到的 evidence 呢，是可以去打造出新的认知以及新的观点的。这些观点不是单纯的靠逻辑，以及不是单纯的靠口耳相传，而是呢是真真实实的 base， 根据最主要最准确的就是数据这件事情，让数据去说故事。所以这一次呢，他其实加入非常多台湾相关的内容啊，专门针对台湾投资人呢所提供了一个课程。那我其实是在跟那个聊了之后呢，我才发现他竟然有要做这件事情。所以呢我们就有跟 Master Talk 这个平台呢也联系上了，然后他们有提供呢一个折扣码。如果呢你听完了今天这期节目，然后你也有看过持续买进，你对 Nick 的说法，或是你对 Nick 呢分享怎么样去这个打造自己个人的财富啊，投资理财啊，或是说储蓄啊，他的这些观念呢你很认同的话呢，你想要再学更多的话呢，有这门课你可以一样到我们今天节目的这个资讯栏下面呢，我把这个课的连结放在下面，然后 Master Talk 有提供一个折扣码呢，是叫做 onthewayMK。 那一样这折扣码放在底下呢，这每一个课程呢，这个课程是可以折300块台币。所以如果你有兴趣的话呢，欢迎到他们的官网上面看看。那 Master Talk 上面呢，其实也有蛮多的课程，包括像是 Morgan Housel 这个致富的心态也有，还有用钱的艺术，他也有出这个课程，还有很多包括投资理财以及自我成长的相关的课程。大家如果有兴趣的话呢，也可以去那里看一下。那以上呢就是我们今天说要跟大家分享的这一集第2集的 Bonus Track 的节目啦。今年呢已经快要剩没几天了嘛，圣诞节已经过完了嘛，所以非常感激今年呢我踏上了无路之路，然后呢非常勇敢的呢，然后去进行了2场的这个访谈，我觉得是非常非常的值得纪念的。那我们就下周见咯，拜拜。